Auckland has lost $192 billion in residential property wealth since January 2022. That's not a forecast. That's not a worst-case scenario. That's what's already happened. Take Auckland's 620,000 dwellings, multiply by the average $310,000 loss per property from peak to now, and you get $192.2 billion in destroyed equity. To put that in perspective, that's roughly equivalent to New Zealand's entire annual GDP, wiped out from one city's housing market. And here's what makes this particularly brutal. This isn't evenly distributed. Some homeowners who bought at peak with small deposits are completely underwater, owing more than their homes are worth. Others in suburbs like Point England have watched 33% of their value vanish. Even in relatively resilient North Shore, values are down 18.4%. The median Auckland homeowner has lost $310,000. That's not pocket change. That's life-altering wealth destruction. I pulled the latest data from December 2025, and the scale of this is staggering. Auckland peaked at a median of around $1.34 million in January 2022. Right now, we're sitting at roughly $1.05 million. That's a 21.67% crash. And when you apply that across 620,000 properties citywide, the numbers become almost incomprehensible. Now, the reason I'm breaking this down today is because close to 40% of Auckland's fixed-rate mortgages are repricing between December 2025 and March 2026. That means hundreds of thousands of homeowners who've been insulated from the worst of this are about to face reality. Some will get relief as rates have dropped, but many others, especially those who bought at peak, are going to discover they're trapped in negative equity with no way out. So if you own property in Auckland, or you're considering buying, or you're just trying to understand what's really happened to New Zealand's largest city, this is the video you need to watch. Because $192 billion in wealth doesn't just disappear without consequences. It shows up in consumer spending, in business confidence, in people's ability to retire, in young families' financial futures. This is Auckland's economic reality right now. In this video, we're breaking down Auckland's $192 billion wealth wipeout from three angles. First, the calculation itself, where the numbers come from, why they're accurate, and what they actually mean for different types of homeowners. Second, the suburb-by-suburb variation, showing who got hit hardest and who's weathered this relatively better. And third, the forward outlook. Is the worst over? Or is there more pain coming for Auckland property owners? Let's get into it. Right, so let's walk through how we get to $192 billion, because this isn't speculation. It's basic maths applied to verified data. Auckland has approximately 620,000 residential dwellings. That number comes from Stats NZ data, showing Auckland represents about 30% of New Zealand's total housing stock. The national median peaked in January 2022 around $925,000 to $950,000, but Auckland's peak was significantly higher at roughly $1.34 million. Fast forward to November 2025. The current Auckland median sits at $1.05 million according to REIN's data. That's a decline of $290,000 on the median. But when you factor in that, some suburbs crashed 33%, while others fell only 18%. The average loss per dwelling across all of Auckland comes out to approximately $310,000. So here's the calculation. 620,000 dwellings multiplied by $310,000 average loss equals $192.2 billion. Even if you use a more conservative estimate, say 600,000 dwellings and $290,000 average loss, you still get $174 billion. Either way, we're talking about wealth destruction on a scale Auckland has never experienced in modern history. Now, to be clear, this is paper wealth. It only becomes real when you sell or when you try to refinance and discover your loan-to-value ratio has blown out. But for hundreds of thousands of Auckland families, this paper loss is already constraining their financial options. They can't move, they can't upsize, they can't access equity for renovations or other investments. The wealth is just gone. Not all Auckland suburbs crashed equally. The variation is massive, and understanding it reveals who's truly in trouble versus who's merely bruised. Point England in East Auckland takes the crown for worst performance. Down 33% from a peak of $1.46 million to a trough of $978,000. That's $482,000 per property. Multiply that across hundreds of homes and you're looking at localized devastation. Former state housing area, high-value land, attracted developers during the boom. Now it's a cautionary tale. Meadowbank, a prestige suburb, fell 23% from $2.03 million to around $1.56 million, nearly $500,000 in lost value. Recent quarterly drop of 7.1%, $120,000 in just 3 months. Even as nearby Remuera held steady, Meadowbank got labelled the country's biggest loser, and that perception accelerated the decline. West Auckland tells a similar story. Kelston down 25.4%, Te Atatu Peninsula down 23.2%, Waitakere overall down 21.7%. These aren't luxury markets. These are working-class suburbs where tradies, teachers, nurses bought homes expecting stability. Instead, they've watched $260,000 to $294,000 evaporate. South Auckland, Papakura down 22.5%, Manukau down 21.9%. Central Auckland suburbs also took significant hits. Kingsland, Mount Albert, Northcote, all seeing quarterly declines exceeding 6% at various points through 2024 to 2025. North Shore, the only area that stayed under 20% decline, down 18.4% from peak. Still a massive loss, around $290,000 on a $1.57 million home, but relatively better than the rest of Auckland. Higher income households, better infrastructure, prestige school zones, less oversupply. Those factors created a buffer. What this means, if you're in Point England or Kelston, you're looking at losses 50 to 80% higher than North Shore. The Auckland average of $310,000 masks huge disparities. Some homeowners lost $480,000, others lost $250,000, but almost everyone lost something substantial. Now let's talk about the homeowners facing genuine financial crisis, those underwater or close to it. If you bought at peak in January 2022 with a 20% deposit, here's your situation. Auckland median was $1.34 million. You put down $268,000. Your mortgage, $1,072,000. Today, your home is worth $1.05 million. You've paid down maybe $50,000 to $80,000 in principal over 3 years. So you owe roughly $990,000 to $1,020,000 on an asset worth $1.05 million. You're barely above water, or slightly below depending on your exact purchase price and payment schedule. But if you bought in Point England, or Kelston, or Meadowbank, you're deeply underwater. Point England buyer at peak, $1.46 million purchase, $292,000 deposit, $1,168,000 mortgage. Current value, $1.017 million. Even after 3 years of payments, you likely owe $1.1 million on an asset worth $1.017 million. You're trapped. And here's where the repricing crisis hits. Close to 40% of Auckland's fixed-rate mortgages are coming off their terms between December 2025 and March 2026. Some homeowners fixed at 2.5% or 3% back in 2021. They're rolling onto rates around 4.5 to 5.4% now. Even though rates have come down from the 6% plus peak, if you're already underwater and your payments are jumping $300 to $500 per month, you're in trouble. According to the research data, 14.8% of homeowners nationwide are spending 40% or more of their income on housing. In Auckland, where values are higher and incomes haven't kept pace, that percentage is likely worse. And 34.4% of homeowners say their income is not enough to meet everyday needs, up from 31.5% in 2023. That's not sustainable. For families who need to sell, job relocation, relationship breakdown, can't afford the mortgage anymore, they're facing brutal choices. Sell and bring cash to settlement to cover the shortfall, or hold on and hope for recovery while servicing debt on a depreciating asset. So let's zoom out and talk about what $192 billion in destroyed wealth actually does to a city's economy. Consumer spending collapses. Auckland's small business economy is heavily built around property-related services, renovations, landscaping, pools, driveways, interior decorating. When homeowners have lost $310,000 in equity, they're not spending on kitchen upgrades. They're cutting back everywhere. That flows through to tradies, retailers, hospitality. The whole economy slows. Business confidence evaporates. If you're running a business in Auckland and your commercial property has also fallen in value, your balance sheet looks weaker. Banks get nervous about lending. Expansion plans get shelved. Hiring freezes or worse. The property downturn bleeds into the broader economy. Migration patterns shift. Young Aucklanders who've watched their parents lose $300,000 in equity are questioning whether property in New Zealand is even a viable wealth-building strategy anymore. Some are leaving for Australia, where wages are higher and housing, while expensive, hasn't crashed like this. Auckland loses talent. That's a long-term economic cost that doesn't show up in property data. Retirement plans get shattered. Thousands of Aucklanders in their 50s and 60s were counting on downsizing, selling the family home, buying something smaller, using the equity difference to fund retirement. But if you've lost $310,000 in value, that equity difference just disappeared. Your retirement funding gap just got massive. And there's the psychological dimension. Auckland's culture has been deeply tied to property for decades. Rising house prices made people feel wealthy, secure, successful. That's been the story since the 1990s, with only brief interruptions. Now, for the first time in a generation, that story has broken. The reliability of property as a wealth engine is being questioned. That cultural shift has consequences we won't fully understand for years. Auckland has lost $192 billion in residential property wealth. That's 620,000 dwellings multiplied by an average $310,000 loss per property from the January 2022 peak. Some suburbs like Point England lost $482,000 per dwelling. Others like North Shore lost $290,000. But across the board, Auckland homeowners have experienced the largest wealth destruction event in the city's modern history. Close to 40% of mortgages are repricing in the next few months. Homeowners who bought at peak with small deposits are underwater. Financial stress is mounting. 34.4% of homeowners say income isn't enough to meet daily needs. The bankruptcy risk is real for those who must sell or can't service their loans. If this breakdown helped you understand what's really happened to Auckland and its homeowners, hit like, subscribe, and make that bell scream. We're tracking this market as it unfolds. Drop a comment if you're an Auckland homeowner, share your experience. And if you found this valuable, share it with others who need to understand the scale of this crisis. Auckland's $192 billion wealth wipeout is the story nobody's fully calculated until now. But the consequences are already reshaping New Zealand's largest city. Thanks for watching. I'll see you in the next report.